Today we are going to be talking about tokenomics and due diligence. My guest here is Lisa Tan. She is going to be a mainnet speaker, and this is a preview of the agenda setting discussions that we'll be having at the conference happening on September 21st through the 23rd in New York City. I'm Chase Devins. I'm going to be moderating this session. I'm an enterprise research analyst at Messari. And as I introduced Lisa, she is a research economist at economics design, and she works on various token engineering and education projects. Additionally, Lisa also recently released a book titled Economics and Math of Token Engineering in DeFi, and we've linked to that in the chat below. As we're going through this, if you have any questions, feel free to ask them in the chat or with the Ask a Question feature, and I'll keep a little bit of time at the end for us to go through those. Last but not least, just again, Lisa will be speaking at mainnet. We'll have a couple more details about how you can secure some tickets at a discount after this session, so be sure to stick around until the end. All right, Lisa. Just to kick things off, so as we've said, this is teeing up for mainnet, and when you speak there, we want to have you talk on a panel with either just a couple people or a wider range of general personas to talk about token due diligence. So would love to get your opinions on who you would like to have there and debate this topic with.
Great question. And I think I can divide people into three segments. The first one are the VCs, the second are infrastructure providers, and thirdly are people who have experience in doing due diligence. So in the VC space, for specific people, looking at like something like Arthur Cheong or Arthur 0x from Defiance, Amy Wu, the head of FTX Ventures, and people from A16Z or Paradigm. And these are people who have a lot of experience doing due diligence, not just token specific, but project specific. So speaking to them will be very interesting, very insightful. The next segment of people will be people in the infrastructure space. So infrastructure is people helping and supporting and building the entire token ecosystem. And that will be people from Machinations, people from Gauntlet, people from Navic, potentially someone from Prism Group or Delphi Digital, and also maybe someone from the SEC because you built the regulations to allow such infrastructures to flourish and designing these infrastructure. The third category are people from the audit side or people with experience in due diligence anyway in a different capacity. So someone from the Big Four or someone from ACCA, where they have a structure of how to do due diligence from a financial perspective, and trying to take those principles and those fundamentals in a token perspective would be very interesting.
Yeah, those are some great ideas. I really like the one especially about having someone from the SEC speak, because that is such a gray area for this industry, and having some sort of understanding of what the legislation is going to be around these things will be so important for designing the future of these systems.
Exactly, because designing the future and designing regulation is not just about creating new regulations to stop innovation. It's about asking a lot of questions, having very open discussion with the same goal of protecting users, protecting the uninformed users. And no better way to protect the uninformed users than due diligence, which is the whole DYOR, do your own research. And if there is a way to quantify and structure do your own research, turn them into regulations where other people can start doing due diligence on your behalf, then there will be so much better and safer as an entire industry. Because it's really hard to do any of these. Each of these VCs have big teams of people doing due diligence. So you can't imagine any random person in the street just doing due diligence on their own, and that's not even their full-time job. So I think it would be very important to have a variety of people with different incentives. So just like an ecosystem, you have a lot of different agents in the space. We should also have a big panel with different kind of people and different experience to have this very open conversation.
Totally agree. We will do our best to get a wide variety of people on the panel with you. So now just to transition into the topic itself, would love to hear about how you came to discover the topics of token design and due diligence, and then also just kind of break down the difference between those two aspects.
So starting about how I came into the space first, I think token design was the first step. And the way I came into token design was when we have new technology, we have new ways of doing things. And this new technology is so much more powerful than what we imagine. This new technology, it's like building the entire universe for the first time, where you get to build everything from scratch. You get to define all the fundamentals. What will be the fundamentals then? The fundamentals would be the Newtonian physics of the digital space. And that is designing an entire universe from scratch with the same principles that we use or the same basic fundamentals. And the equivalent of physical physics or Newtonian physics in the physical world is really economics in the digital world. So with that in mind, that's how token design came about. You have to design the incentives in place. You have to design the infrastructure, the system in which these incentives will exist, and how you design a robust market. How do you design systems to impact people and incentivize people to behave in certain ways? That's where all the aspect of token design came in. And from a framework, which is the key thing that I wrote about in the book, from the framework, you evolved to applying them, researching them, backtesting them, quantifying them, and doing everything around applying the framework. Then came the next part of, well, if we design all these things, we can design everything from scratch. One of the key things about when people think of token economics or tokenomics, people think about game theory. And game theory is the analysis of all these things being designed. And so when we design these token systems, we need to figure out what's a good token system. How do we even define what good is? How do we calculate and quantify what good is? What is good in a DeFi system might not be good in an infrastructure system, might not be good in a GameFi system. So how do we define what good is? How do we create a structure? How do we test it? How do we quantify the risks? These are very important. And you can design something. Everyone can design, people can design systems, but how do you test for them? How do you create benchmark? And how do you compare between them? It's key. And especially through the crash that we've seen many times and the most recent ones, there is still a lack of due diligence. There's still a lack of financial literacy, token literacy, Web3 literacy, and there needs to be a proper structure for doing due diligence to protect the uninformed. And so design and due diligence, they're quite similar because they're the same side, or they're two different sides of the same coin. So they're both the same coin. It's about robust token systems. One is designing it, and one is testing and validating and verifying how well it's being designed.
Awesome. That's a really great breakdown between the two. I really like the point you made about needing to assess these kind of in an ongoing manner, and it'll help us prevent more of these crashes that we've seen recently. The Luna collapse really comes to my mind there. Obviously, like, we had so many investors and smart people that were involved in that one as well, and it just goes to show you that, like, VCs and everyone can also make the same mistakes of evaluating tokenomics. So it's going to be ever more increasing as these become more and more intertwined in their various ecosystems.
One important thing to also note is that economics is not hard science, right? It's not like physics. It's not pure math. Economics is a social science. It's a live thing. So once you have economics, once you define the economics of this system in this period, it does not mean that this is the economic system for the rest of the longevity of how the system exists. So for context, the way America started many years ago, it's not the same system. Well, technically, it's not the same system as what America is today. That's in general, and that's how a lot of other countries work. You evolve as the system evolves, you evolve as society evolves, you evolve as the market changes, the goods and services being produced changes, and you need to change the economics with it. And every time there's a new change, you need to be able to understand the risks in place. And the risks are not just the primary risk that you can see in the short term, but all the other potential risks out there. The mid-term risks, the long-term risks, things like adverse selection because of how you design the system, things like token risk or system risk, governance risks. There are a lot of different risks in place that you need to start quantifying, that you need to start analyzing, not just in this period, but in the various periods that your system will exist. So you know when to change them.
Great point. Could you help paint a basic picture of kind of how the system looks today, are there any sort of frameworks that are standardized that people use to evaluate stuff? Or is that pretty much the reason that you wrote this book in the first place?
Yeah, so the reason I wrote the book was because that was 3 years ago, but I started researching 5 years ago, where if we're going to build a brand new planet from scratch, we get to rewrite physics from scratch, then we need to follow a certain kind of principles. In physics, you've got first principles that we can always rely on. So there should be some form of first principles that we can all rely on, that we can start building together with, that we can start benchmarking against, that we can start evaluating against. And it's some form of standardization throughout. And so from that and that was how everything started. And that standardization is in a framework with 3 key pillars. You've got market design, mechanism design, and token design. Again, it's all about designing systems. So how do they work, and how are they separated, and how are they different? In market design, this is how you define the market, the parameters of the market. If we're going to design a planet, we need to have gravity. And we need to have constraints in how strong this gravity is. When you're on Earth, gravity is 10. As you move out of Earth, you move towards the moon, gravity changes. We need to understand what is the limit in which our market forces will be prominent, or the market forces will act in the way that we have designed it to be. So we need to first define the market. Just like an economy, you have a market because different people specialize in goods and producing goods, and then you trade with each other. So we need a market with the agents who make up the market, the constraints, and all the other things that define your market. That's market design, designing the market. How do you attract people? That's where network effects comes in. That's where user behavior comes in. That's where the different agent type comes in. Second thing is mechanism design. Mechanism design are the rules in this entire space. They don't have to be token-based. They're just rules to allow for any interaction and transactions between users. A market exists because users come together, they trade. If people do not trade, then a market does not exist. A market exists because people get to trade. And so in the mechanism design aspect, we are defining the rules of trade, like governance, the rules of trading reputation, for example, and governing the system. We have different rules of bargaining, different rules of setting prices to trade with each other. The cool thing about Web3 is that we get to quantify and codify these trades into smart contracts. So we know that we can always trust the contract to execute the trade. We just need to allow the right kind of trades to exist. And these trades exist through these rules that we set in mechanism design. Lastly, we have token design. And token design is the design of the token itself. What is a token? A token is anything that represents value. So a token can be tradable, and a token can be non-fungible, a token can be non-tradable, a token can be anything that represents value in the system. So we need to design this token. This token can be a resource, this token can be a utility, this token can be a right and intellectual property. But we need to design how this token is structured to allow the facilitation of transactions within the system. So that's market, mechanism, and token. So this is from a design aspect. Now, from a design aspect, if we get to standardize this from an internal system perspective, we get to design them, then when we are evaluating and validating and doing due diligence for these systems, then we can use the same process and the same framework to analyze and verify and validate against the framework. And everything I've talked about are things that a system or a designer can control. There are a lot of other things that a designer can't control, like different marketing or the different ripple effects of bad press, or like the team itself. A designer cannot control that, but a designer can control what is within the system. And again, we're talking about token due diligence. That means purely just the token itself and the system the token exists in. We're not talking about everything else. So with that, it's 3 different pillars: market, mechanism, and token, and how they all come together, how they allow the facilitation of trade, of transactions, and how they allow users to behave the way we want them to behave.
It's a great rundown. Specifically within like each of those 3 pillars, what are some of like the more detailed variables that you'll look at in regarding to a specific token, like financials, cash flow, and whatnot?
Yeah, great question. So let's start with the first pillar of market design. And market design, as you mentioned, we talk a lot about the agent types. How do you constrain the market? Who is in the market? What activities can be done within the market? And one of the easiest way is to understand the agents. So agents are the people interacting in the system. And there are two big key topics that we can look at when it comes to agents. The first one is, given all the incentives in place, are we adversely selecting for users or for agents in the space? So many months ago, we were analyzing this project. I forgot what the name was, but this project is doing some form of third-party marketing, tokenized marketing to help other protocols to grow. And the way the incentives are structured, the incentives are designed in this system, it adversely selects for the wrong kind of people to be in the system. What are the wrong kind of people? The wrong kind of people are people coming in to extract value instead of creating value. Creating value will be people staying in the system, they trade with each other, they stay in the system, they help the system to grow, and they continuously add value and grow the network. People who are extracting, or agents who are extracting, are there because of the free airdrops, the free tokens, or the free something. They're there just for that value, and once they receive that value, they will leave. And when they leave, they add some pressure, or they are just not creating value in the system. So when you look at market, important thing is adverse selection. Given the incentives in place, are you adversely selecting for the wrong kind of agents in the space? If your agents are here to extract value, then clearly your system is not going to work. It's clearly not going to be resilient or robust or sustainable. And that is not the kind of systems we want to create. So that is from a design perspective and analyzing the design. The other way is to look from a data perspective because, well, on-chain data available, anyone can tap into it. So looking at the various agents in the space, or looking at the various agents transacting in your tokens, with your tokens, how are they behaving? How do you analyze them? How do you understand their behaviors? And are these behaviors the kind of behaviors that your token was meant to incentivize? So this will require a little bit more, like it's really specific to the kind of systems that you're doing. If you're a GameFi system versus a lending borrowing system versus a decentralized exchange, you want to incentivize certain kind of behaviors, or you want to have a certain kind of agent. And based on the token transactions and your wallet balance, you could do that kind of analysis and bring more insight to figure out, okay, maybe in my token, maybe it's a decentralized exchange, and you see a lot of bots and arbitrage traders, and a lot of people sending funds to the centralized exchange, then people being liquidity providers and people doing the swaps. Then you know that this system is probably not going to be robust in the long run because a lot of people are leaving the system or they're just extracting value. People who are creating value in a decentralized exchange will be liquidity providers and people who are constantly doing swaps because they add revenue and they add the facilities and services available by the decentralized exchange. So that's one example of the token, the market design aspect. Do you want me to continue? Because I could talk about this for a very long time.
I have a couple more questions. Maybe we can come back to it, but I really like how you break out the good versus bad behaviors up front. So people analyzing the success of these projects down the road can understand, is this actually like a successful project or not? Just one that comes to mind would be like STEPN. I feel like that has had a lot of extractable value and not necessarily sustainable. I guess all of like the GameFi space, trying to use a tokenomic model that kind of worked in DeFi and just kind of copy pasting it into the GameFi space. And really, I like what you say about understanding, are people using the system the way that it is intended to be, or is it just being like extractable cash? And we are so far from like solving that problem, but I agree that this is a huge step forward in understanding how we can evaluate this stuff going forward. I want to talk a little bit about, who should be performing these key services when we're designing these systems. That's probably going to be more so on like the developer and project side. Due diligence, that's more for everyone. So do you think that there should be like one canonical framework to evaluate these things on the front end and the back end? Should the same people be doing it? Do we see like a full industry like audits springing up around this?
So in this fantasy panel that I would like to have, I would like the regulators like SEC being part of it, because I foresee that in the long run, in like 5 to 8 years, we will start having regulation for this space. Just like how we have audit regulating the financial health of a system, of a country, of a company, then we also need to have an independent body auditing the ways these systems are being designed. So I foresee something like the Big Four, but for the token space, where they're not analyzing the financial aspects at all, but they're analyzing how these systems are designed. So what does that mean? It means that there are three important aspects of due diligence. The first one is finance, of course. When you look at the cash flow, understanding how healthy it is, we have that, and that's out there in the space already. We can continue to do that. The second one is smart contract audit, which is something that we have now, which is auditing how these transactions will be executed when they're all done with code. But the most important thing of all of this is how the system is designed in the first place. Imagine every token-based system is a country. Then you have all these like government and bright people coming in to manage the country and technically helping it to survive and sustain. So we need something similar as an independent body coming in to analyze the health of these systems, not just the current risks in place, but what are the other long-term potential risks that a system can start to mitigate? Because again, we get to design these systems from scratch. We have the power, we have the ability to make changes for a better future. We can analyze all these data. Again, going back to the market design that we talk about, we can understand how these incentives will adversely select for the wrong kind of people, or we can analyze how the current users are behaving in response to the various incentives in place. So getting an independent third party, a specialized field like audit for an economic system will be a very great way to move forward. And we can standardize this across every system, because at the end of the day, it's a market. Markets exist everywhere. Markets exist for the longest time. And a market is just people coming in to transact and trade with each other. We get to capture the value much better in a token today. And because of that, we have more information where we can start analyzing and quantifying the risk. One thing that I will add, though, which is quite difficult, is the various types of tokenization projects, which will definitely add to the complexity of how we do due diligence. So the three key things that I can divide them into three key buckets. The first one is infrastructure projects. Infrastructure like your layer one and layer two blockchains. Infrastructure like the Graph or Oracle projects, where these infrastructure provides, it's like a key input to another system to survive. So you need Chainlink's Oracle for your lending and borrowing protocol to continuously lend out the tokens. And because of that connection between another ecosystem, it can add a lot of complexity to quantifying the risk of the economic risk of the system and potential economic exploits. The second bucket, games. Games themselves are very complex systems, and it is a complex closed loop system in its own right. I think that one is easier to do due diligence because you just quantify all the risks within the system. There is much less interoperability, or there's much less interaction between other ecosystems as of now. And the third one is just Web3 in general. So we have DeFi, social DAOs, NFTs, everything that constitutes Web3. And that is another complicated way of doing due diligence, because it's just really difficult. It constantly evolves. So how you do due diligence how you standardize due diligence within the decentralized space, decentralized exchange space, is also going to be quite difficult, as we have new kind of AMM models coming up.
Yeah, that's an awesome breakdown. I want to, double click on the idea of, why do these tokens exist in the first place within each of these systems? I think we have a lot of discussion going on right now, value as governance tokens again through the bear market, and what do these actually do? Is there a purpose behind them? Are there any key factors that you look for across these various different buckets to identify that?
So that's a very interesting topic, because tokens, if we can divide token projects into two key categories, the first one will be infrastructure projects that we talk about, and the second will be community-based. So how are they different? For community-based, this will be the token will have a utility, and the main reason for the token is to coordinate between all your decentralized parties, all your decentralized agents. So people come together and they just need a token as a common source of language to coordinate within your system. And it's important to have this unique token within the system, within this ecosystem, because you want to have less liquidity to substitute this token to gain this token in another way. For context, let's talk about governance token. If governance token is defined in US dollars, or instead of governance token, you get to vote based on how much US dollars you have. And governance token is native to your system, whereas US dollar can be earned in any way. So when it comes to generational wealth and generational wealth transfer in US dollars, or you becoming a very successful entrepreneur and getting US dollars from a different place, then you can skew the voting rights or the governance rights much easily, because you get to accrue this token in a different way. As opposed to your token being created natively within your system, then it sets a level playing field in which everyone gets to come in and start afresh, and we get to earn or get access to this token through the various kind of good behaviors that the system deems is right to accrue these tokens. Then it represents your stake or represents your right to vote and make changes in the system. So on a very high level, on a community-based system, tokens make sense. Tokens help to coordinate and collaborate with each other with a lower substitution effect or ways to redeem to gain these tokens, which helps to level out the playing field a little better. That being said, then but at the same time, that is where we're all starting in the same place. When it comes to generational wealth in the US dollar sense, generational wealth transfer, we can also see such kind of generational wealth transfer in terms of different investors coming in during the different kind of crypto cycles. So while you don't have intergenerational wealth transfer, you have inter-cycle wealth transfer of tokens, and VCs could adversely get a lot more tokens in this cycle, which has a lot more value in the next cycle, and you could skew this quite a bit. So have we perfected the way to create governance token? No. Are we on the right trajectory to potentially figuring out how to make the system a little bit more equitable? I want to say yes. So that's a community-based kind of token structure. Then we have another token structure, which is infrastructure-based. And this is where it gets a bit more challenging, because for an infrastructure-based, it seems like a lot of these tokens are used for fundraising, or the main reason is crowd fundraising. Infrastructure systems will be stuff like the Graph, stuff like your Oracle, the Chainlink Oracle, and other kind of oracles, where you provide value as a system, and you're using tokens to distribute the fundraising so that you get to build the system. So what does that mean? When we're building an expressway, a highway, autobahn, these are infrastructure projects that usually the government builds it, because the ROI is quite low and it's over a long period of time. And a lot of investors don't really have the time to do that. But today we get to open that, we get to open source that, or we get to build that as public goods from the community perspective, which is fantastic. And this value can be used by anyone. We crowdfunded to build an expressway, and everyone gets to use that. That's fantastic. But the entire expressway itself adds value already. It's a valuable project. It's a valuable system in the first place. So do you need token to provide additional value? Do you need token to attract people and incentivize people to use the highway? You should not do that, because by default, the highway is good enough, or it's great that people want to use it. So you don't need to use tokens to incentivize that. You can use the tokens to incentivize more usage of the highway, but the highway should be good enough that people want to use it. And so then the idea of tokens come in a different form. So go back again. In the community-based system, a token is used to incentivize coordination and collaboration. So the token is embedded within the system as part of your system's design. On an infrastructure system or an infrastructure project, the infrastructure itself is already adding value. So why do we need token? We need token, one, for crowdfunding and crowdsourcing, but the other way we can use tokens is to help affect your behavioral economics. So you incentivize more usage, incentivize repeated usage, incentivize different kind of behaviors, reinforce the behaviors that we are already seeing in the system. So both are token projects, but we're using tokens in a different way. One is to affect the rational mind through system design, and one to affect the irrational mind through behavioral economics design.
I really like that framing because it shows the importance of designing these systems so that they're adaptable over time, right? So you talked about like crowdfunding at the beginning, but as the project becomes more successful, people are actually using it, it becomes more of a tool for behavioral economics. So really understanding like where those pinpoints are going to be and when you need to turn on different switches and levers throughout the project's life cycle are just like crucial for the success of a sustainable system. We have a question in, sorry, go ahead.
So just one more point. And I think that's why this due diligence is quite a difficult topic, because when we usually do due diligence, or like a VC does due diligence, you just do it one time. You do due diligence of the health of the system or the health of the company, the team, the founders, and all these other aspects. Oh, where did Chase go? Can you guys still hear?
Yep, we can hear you, Lisa.
Okay, great. Sorry, Chase, you were gone for a bit. So I was saying that I lost my train of thought. Okay.
We were just talking about the kind of the adaptation over the life cycle for
Correct. And because tokens continuously evolve, or the market evolves, the token needs to evolve as well. And that's why due diligence is something, or token due diligence is something that we potentially have to do every year. Just like you have to do audit every year, we do token due diligence every year. For a VC, it's not like you do due diligence for the team every year or every X period of time. But with tokens, we have to do that, which is one of the biggest difference between Web 2 and Web 3. You've got token as a new component or new asset class. And this token changes how the system evolves. The system will keep evolving, and the basic fundamentals do not change, but the risks and entailed with the token being the new component to change the system exists, and it evolves over time. So we need to do due diligence constantly on this aspect.
Yeah, it's one of the really unique things about crypto. It's 24/7, 365. Hate it or love it, we can't turn it off. I think we've done a really good job of hitting on like the main points of token design and due diligence. I want to make sure that we can answer a question that we have in the chat here from Chloe. She asked, can you talk about what type of token design we should stay away from in Web3 or DeFi? Are there any things that really stand out that we need to move away from?
It's a very interesting topic, because it's the opposite of, is there a token design that we should always enforce in Web3 or in DeFi? And just like there is no golden answer or model answer to what a good token design is, there is also not a model answer to what a bad token design is. That being said, though, it's very important to make sure that these systems are not sustainable because of new entrants coming in. So one summary of this to answer the question is, make sure that the system is not attracting value extractors. And value extractors can come in the form of Ponzinomics, or can come in the form of people coming in to just extract all the free gifts and doing the value transfer from VC investing in the project and just taking all the value away. So on that Ponzinomic context, I think one of the chapters talk about Ponzinomics. Ponzinomics is Ponzi plus economics. thing is, Ponzi itself is a bad thing. But using Ponzi-like structure to grow your system is not that bad. What do I mean by that? Using a Ponzi structure to accelerate for growth in like creative growth, like hockey stick growth in your system is not bad, because you need to create network effects. You need users to be in your system. At the end of the day, you are a market. Everything about market design is to define your market and then attract people into your market so people can trade. And Ponzi is good at creating a lot of people in the market. That's great. But if the only reason your system is growing is because you keep getting new people in, it's not going to be sustainable. So once you bring people into your system, they need to do something. They need to be able to transact with each other. They need to be able to find a value that you have created as a system. And that's very, very important. So let's take games, for example. There are two games off the top of my head right now. One is Crabada and one is Axie Infinity. Both of them are quite simple games. Crabada is like an idle game. You have this creature and you don't have to do anything. It just plays on its own and you get different kind of tokens. You get to sell tokens. With Axie Infinity, we've seen the huge boom, and the huge boom allowed a lot of people to quit their jobs in some developing nations and just play the game to earn money. These two games in general have a very different kind of economic structure. With the idle game, it's like there is no value creation at all. And I believe right now they have changed the game quite a bit to try to allow some form of value creation. But if you're just attracting your users in just so that they can mint or they can earn certain kind of tokens that they can dump the tokens after and leave the system, that's not good token design. Now let's go back to Axie then, because Axie also did quite similar stuff. When it first started, it was fine. When it first started, it was growing because when it first started, the token grew because a lot of people were coming in, but people were also using the tokens to buy Axies to play the game. So playing the game was quite important initially. And then once you play the game, you realize that, oh, wow, the financial returns are so much more than me enjoying and playing the game. So instead of play and earn at the same time, it became play to earn, because that's my main incentive. Now you've shifted your incentive or your main value from allowing people to have fun and play the game to changing the main incentive to I can earn and I can quit my job to play my game and I get to make a living out of this. This changes the incentive very much, and it obviously changes the kind of agents that self-selects to be in the system. And we can see that for a good period of time, in the end of last year, in Q3, Q4 last year, the prices of tokens, the prices for SLP and AXS, and grew because there were more people coming in demanding these tokens. So there is a kind of a loop, a system loop, the economic system loop of these tokens, how they interact with each other, how FX comes into play, how the utility of these tokens come into play, how the impact of new agents coming in affects the tokens, the demand of these tokens coming into play, and all these resulted in a huge rise in prices. But is this sustainable? It's not sustainable because the utility, number one, there is not the utility for these tokens, the sinks, are not as robust as the mints. So when you have a lot of mints and not enough sinks, you obviously have inflation. And the second thing is that a lot of people were in the game to earn. And so anytime they receive these tokens, they're not sinking it to play the game, but they're liquidating it to use this to liquidating it because they need to survive. So that again adversely selects for the wrong kind of people in your market, the wrong kind of agents in your market. And when you have a wrong kind of agent in the market, when the way they transact is not going to be value adding, it's going to be value extracting, that changes your entire structure. So you could have the best economic incentives or the best token model, but you have the wrong users in the space, you will not get the incentives that you're looking for.
I think that's a great point. We could talk on this for hours because there's so many specific examples that you can dive in and do case studies on. But we are coming up on time here. Do you have any final call outs or places that people can find you for more information?
Yeah, so you can check out YouTube, where we do weekly case studies, both on the game side and on the non-game side, to explain the economics of these systems. We also have the book and a course, a few courses actually, to understand this system a bit more. Thing is, this is very complicated, and we're only just starting. It is not just about understanding how to design the system, but how do you maintain the system? More people can design the system than people can maintain the system, because you can design a bad system, but you can always help to maintain and fix it up. Just like a country, when a country has a bad leader, you can always, the next leader can help to fix things up and maintain it. But you need to understand the various risks in place. You need to understand how the system runs. You need to understand the secondary impact, the various kind of risks, understand all these different components to create robust and sustainable system. At the end of the day, we just want to create robust systems, resilient systems, and systems that will withstand all these black swans. And it's not just about designing them well, but also maintaining them so that they continuously are resilient through the changing market and changing kind of agents in the space.
Awesome. Well, it's been a great conversation today, Lisa. For everyone in the audience, we are offering a $300 discount on 2022 mainnet tickets. You can use the code podcast300, and that code will be good through Saturday, July 9th. We look forward to hopefully seeing you guys there and attending the panel with Lisa herself. In the meantime, you can get in touch with Lisa through her website or reach out to us at Messari. Thanks again, and we look forward to seeing you again soon.
Thanks, Chase. Bye.
Bye.